if you look at Greece, I mean, the world is making huge issues about Greece, and I mean, they're putting the spotlight on the country and saying, what does this country have to look like from a fiscal and a monetary perspective, from a debt perspective going forward? And I think those are prudent questions to ask for Greece. But if you look at it from a world economy perspective, Greece is tiny. As far as the Eurozone, it makes up 2% of total growth in the Eurozone. So it's a very, very small component of the complete, of the complete region. If you talk about global growth, and you look at total, you look at it from a GDP perspective, it's way, way, way down on the list. So if you're Greek itself and you live in the country or you have business interests in the country, obviously what the government does with their debt and how they treat what is going on at the moment obviously should make a difference to you. But if you look at it from a global growth perspective, no, it shouldn't really impact to such a large degree.
Talking about global growth, we've seen data out of the US. Inflation seems to be steady there. The jobs are still a bit sticky. What do you make of global growth going forward?
Well, it's all about China. And I mean, we've got all this talk about China and what is happening in China, and that it's going to emerge as a new power and as a new power base. And that seems to happen more and more, because if you look at the GDP numbers and you just scan across the globe and you just look at how GDP numbers look, all your growth is all pro-Asia at this stage. It's not really out of G7 or the old G7, kind of out of the old Western countries. Western countries are trying to piece together their lives, after, post-crisis, and that's obviously going to take time. So you start seeing some positive numbers, you start seeing a bottoming out effect, but you're certainly going to take a long time before you start seeing positive GDP numbers. And obviously G7 is never going to grow, or shall I rather say, your Western countries in G7 are never going to grow like China's going to grow, at these amazing 10% numbers, because the countries are just not, they're just not there anymore.
So you're seeing growth in emerging markets, growth coming from emerging markets rather than developed economies going forward?
Yes, and I mean, South Africa makes up a critical component of that. We're not a massive player as far as GDP growth in the emerging zone is concerned, but we're an important player because of the resource base that we have and the infrastructure that we have. You take a drive around South Africa, you see the road infrastructure, you look at the ports and the terminals, and there's a lot of people that have spent a lot of time trying to upgrade this country now, as we speak, trying to make it a more viable player within the emerging market space. So, I think that's good news for South Africans, and it's good news for emerging markets as a whole.
In terms of currencies, if you put the rand against other emerging market currencies, is it overvalued? Has it strengthened too much?
But remember, currency is always a relative. So you're always looking at a currency relative to another currency. You're never looking at a currency in isolation. And the currency is strong in South Africa because you have weakness elsewhere. And you have weakness predominantly because of interest rates internationally. So, if you were a European investor and you put your money in the bank there at 0.25%, or you had the choice to put your money in South Africa at 7-8%, it's an obvious choice. Even if you take into consideration that the rand is volatile and that, there's a certain margin that you need to take into consideration, you're still earning a heck of a lot more just in the risk-free rate in South Africa than you are in the bank rate, and as a matter of fact that you could potentially make from a dividend yield perspective on stocks internationally. And that's why you're seeing this incredible strength in the rand. And that's why many people are talking about it being overdone on the downside, and that it should start, coming back, to a normal level. That's part and parcel of economics. It's laissez-faire economics, let it be,
We saw the rand yesterday reaching a level of about 7.21 against the dollar. Given dollar weakness, for next week, does it call for another interest rate cut?
Look, it's difficult to say. Look, firstly, I don't predict markets, so it's difficult for me to say what the MPC will do, do next week. Certainly, from an inflation perspective, this is good news because it'll keep inflation lower for longer. Remember that MPC also acts on what inflation numbers are at the moment. They don't predict inflation numbers. So when inflation drops from its 6% level at the moment to, say, for instance, 4%, they react on that only when it becomes available to them, not necessarily if the rand moves. Because remember, as strong as the rand is at the moment, it can go back to 740 pretty quickly. South Africa, I don't know if you know, but it's the 15th largest traded currency in the world, which means that the liquidity that underpins the rand is huge because people are trading it on a continuous basis, and that's why you see the volatility in the rand.